Ladies and gentlemen, the stock market has exploded and rocketed up with the Federal Reserve cutting interest rate by 25 basis points, and that's continuing the incredible momentum of the stock market in US going up. And let's watch on and see what are my reflections and more importantly, what are my strategies moving forward. And this time around, I'm going to recommend something quite interesting. As usual, these are my disclaimers, and let's go. So the Federal Reserve has announced a 25 basis point cut, and this is totally in line with expectation. The Federal Reserve Open Market Committee has lowered its benchmark overnight borrowing rate by a quarter percent point, and that's within the target range of 4.5 to 4.75%. This time around, the vote was unanimous, meaning that in order for the Federal Reserve to decide whether to cut or not to cut, they'll put it to the vote with the entire committee. The last time there was actually the people who actually said no to a rate cut, but this time around, everybody agreed to a rate cut. So this is something highly anticipated, and that's in a good sign because we need the interest rate cut to further stimulate the economy and also prevent the stock market from softening. And the Nasdaq and the S&P 500 broke all-time high again. You need to understand how strong the momentum is. Early this year, when I was just thinking that the S&P 500 could broke 5,200 points would be wonderful. This time around, we are talking about 6,000 points limit, okay? And that's incredible, right? So we're very borderline there already. So Tom Lee, in his incredible foresight, has actually predicted this. I don't know how he does that every time. The Nasdaq has gone up incredibly by 1.5%. And so this year, it has gone up, almost by some phenomenal 30%. And that's incredible, right? So this year is a fantastic year for the stock market, and congratulations to many of you who have made a hell of money. And this is a time that let's also reflect what should we do with this current stock market situation. So what did the Federal Reserve Jerome Powell said? So it's important to reflect what he said. Powell actually said that the economy of US is very strong, okay? It's strong overall, and the labor market has cooled down from its previously overheated state and remains solid. So there's no risk of unemployment, but yet it is no longer as tight a labor market. Inflation has eased substantially from a peak of 7% to now 2.1%. I think it's referring to the closer to core inflation. And they are actually right now able to maintain the dual mandate of maximum unemployment and inflation going down 2% goal. More importantly, at this juncture, they are not making any decision on the pace of future rate cut. During Q&A, he specifically addressed their point of possible rate cut in 2025. But let me say what he says, okay? He said that it's not their plan to raise rates in 2025 because there's a lot of people who are actually quite afraid of it. He actually did not rule that out, but they say it's not in their plan. So if the economy remains strong and inflation is not substantially moving towards 2%, we can dial back policy restraint more slowly. So basically, maybe stop rate cut or maybe even increase rate. But that's only on the condition the economy remains strong and inflation not sustainably moving towards 2%. But if the labor market were to weaken unexpectedly or inflation fall more quickly than anticipated, we can move more quickly. So he's basically covering both sides, but at this juncture, not ruling out any interest rate hike risk, but he thinks that is not in their plan. The whole market is more anticipating what Trump would do that can cause interest rate to hike. The good thing is that, he actually said that the Federal Reserve will not try to anticipate fiscal or trade policy. And that's important, right? Powell actually said this. Future policy decisions will depend on incoming economic data, and the Fed will not try to anticipate fiscal or trade policy. That's important because all of the stock market right now is anticipating what Trump will do and reacting according to it, and that could be wrong. That could be a wrong strategy, and the market could actually go in the wrong side. So the Federal Reserve want to make it categorically clear. We do not know what the timing and substance of any policy changes will be. And he's right? Who knows what Trump will do because he's very volatile and difficult to predict. We therefore don't know what the effects on the economy will be specifically, or whether to what extent those policy would matter for the achievement of our goal, maximum employment and price stability. There is this current tension between Powell and Donald Trump. And Trump has actually said before and criticized Powell during his first appointment at White House. At one point, he actually suggests that Powell is a bigger enemy than Xi Jinping, which is ridiculous because Donald Trump appointed Jerome Powell. It is Donald Trump's, in that sense, Donald Trump's fault. He thinks that Powell is not doing his job, but he doesn't have the power to do it, right? He doesn't have the legal rights to do it. So Jerome Powell told reporters that he will not resign before the end of term, even if Trump asked him to leave. And when asked specifically whether he would step down, if Donald Trump to resign, he gave an unusually blunt answer, no. He later said that the removal or demotion of top Fed officials was not permitted under the law. So this is important because all these things have the most important thing of making interest rate direction predictable, meaning that as long as Jerome Powell is on the job, I think the outcome is more predictable, and that's why the stock market recovered. So, what's in for interest rate moving forward? Let's see what analysts say, shall we? The analysts are actually quite diverse in their opinion. We've got some people actually say this is a perfect point for a Federal Reserve pause, and actually said without a credit crisis emerging which is not evident at this point in time, the greater risk is market adding stimulus to already inflationary leaning environment. So it's potentially highly inflationary. Many will agree, but this is the perfect point for Fed to pause and reassess the landscape, right? So that's one view. Okay, there are other analysts actually said that there could be a rate pause in December. So the market is quite diverse on their opinion. But currently, right now, the market is pricing a 75% chance that there will be a 25% basis point cut, a 0.25% interest rate cut. And that's good, right? That's good. And I think this will spill over across the globe, and it's Singapore, Malaysia, Thailand, Europe, everyone will potentially have a fall in interest rate. So I think we should wait and see, right? In the case of Malaysia, I don't think Malaysia increased the interest rate much. So I think the likelihood of them cut may not be high. But in Singapore, interest rate downward adjustment, I think it's a direction that will happen. So let me give you my reflections on the Federal Reserve rate cut and the direction moving forward. This is my view. Trump's future policy impact kind of already factored into the stock market, right? So I think everybody know what he potentially can do. That means the worst case scenario, and what he say he could do is already factored in. And the current stock market rally would likely to continue to the end of the year, and possibly early next year as well. So the S&P 500 hitting 6,000 points is a near certainty right now. We are just about 30 or 20 points away from 6,000, right? So it may even be this week or next week, right? So it's a near certainty right now. I would say that the Treasury bonds recovery is very likely as the market recovers from inflationary fears. So right now, the Treasury bonds prices are coming down is because everybody is so afraid that Trump policy will be inflationary. But I think Trump's policy being inflationary is a possibility, it's a risk, but it's not certain. But what is certain is that rate cuts are going to come, and I think Jerome Powell is actually leaning more towards that. I don't think the bonds would crash much further, and I think the bonds is likely to recover much. That said, bonds are not like the S&P 500 or NASDAQ. It doesn't compound over a long period of time. Wherever I have bonds that are not held as part of the rebalancing portfolio, I probably won't hold them for too long, given this uncertainty of where the direction is going. And this is something that I don't like to gamble. I can afford to lose the upside, but I prefer not to gamble over this. Berkshire Hathaway, as owned by Warren Buffett, seems to be doing a lot of selling. They're holding a lot more cash right now. In fact, the cash power is, I think, $300 billion. I think we should take a cue from there as well. I've always said that it's okay to do some rebalancing back to cash. Your equity portfolio is now probably to the roof. And there should be some rebalancing, right? If your ideal mix is 33, 33, 33, that means one third, one third, one third. I'm not saying that's the ideal ratio, but I say if your ideal ratio is that ratio, then right now you should be something at 50 or 60% more towards equity. I think it's okay to do some rebalancing. I've already started doing it, and I'll probably do more. So this is what I will do. I cannot tell what you should do. This is what I'll do. So in that sense, I'm taking some cue also from Warren Buffett. This is technically not selling into profit taking. This is just rebalancing, right? But call it what you want. But this is what I'm going to do. So I think there's some comments asking me to make a comment on my wrong prediction of Harris winning. First of all, I always say that it's a neck-to-neck prediction based on exit poll, but that's not important. The more important thing is that, that the whole stock market is now responding very positively to Trump winning, and that's most important. So this channel is much less of a political view. It's more important of money view, right? So I'm more keen in the upside that comes from political outcomes. So whatever happened there is probably immaterial to our money-making path. So if you're coming in to understand political outcomes and all this, this is not the channel. This is a channel where we all learn how to make money. And I think this is where I'll continue to focus my mind in. So this is a very interesting outcome as well. So I would be speaking probably in a day or two. Remember to give a like, subscribe, and join us on our Telegram channel. The video interview with Chris Tan and Eddie from Haven is a very important video that every one of us should watch, because many of us have made the mistake of investing in the whole life policies and investment link policies. And right now, you're just stuck with it. For those people who haven't done it, I would suggest you watch it before you make any decisions. For those people who have been stuck with this, there are some ideas that are given as well. This is an important video that all of us must watch, because a lot of us are impoverished by wrong policies, wrong insurance policies, and it's time for you to be aware what you should be doing. Okay, with this, thank you, and I'll see you in a day or two. Bye bye.